Okay, we are session 21, so we're now going to be walking through step-by-step actual analysis, which is fun and scary all at the same time. So
Yeah.
it's a lot of starting to dive into the weeds, and so we're just going to slow play, walk through this little by little, so we can start to understand how to do analysis, how to do taxes, so that we can have an effective way that we look at things. So the first thing we're going to do is we're going to look at so this is for the attorney section, okay?
Mhm.
And we're going to be starting off with the analysis model, and we're going to start off with the personal financial statement, okay? So the first thing is we'll pull up the personal financial statement, and we're going to go start up here on the left side. And remember that when we're doing this, we're just trying to put all this stuff in a centralized place so that it helps us start to digest what's going on with the borrower, okay? And, so the first thing we kind of start walking through their assets that they own personally, okay? So the first one for this is actually a made up personal financial statement, but for John and Maggie Franks is we're going to put 275,000, okay, because they show that they have cash, and that's physical cash in the bank that you're going to want to put on there. Now, there have been times where people have said to me, I have a lot of cash. And I'm like, well, where is it? And they said, well, I keep it under my bed. I said, well,
Not gonna help us in this.
help me, I need it to be in the bank. So anyways, we need them to show their cash, and they need to have it on some sort of statement. Okay. Um, so stocks, okay, would be another thing that we'd look for. If you notice here, the next thing on the item is accounts or notes receivable. Okay. And if you notice, they have $50,000. So chances are this would be a question we would ask Mr. and Mrs. Franks. What is that? And well, we lent money to, brother-in-law, whoever, right? One of our kids. And so, or an actual third party that's paying us back on these terms. So we just want to understand what that is when we go through it. Okay. And by the way, if you have questions when I go through this, feel free to stop. Okay.
Um,
Yeah, go
I
ahead.
think I don't know if I'm looking at. Are you going through the attorney scenario on the training?
Yeah, let me just pull up here. I thought I was, but
Because I think my personal financial statement shows the cash in bank that they have is
oh,
38,
sorry.
36.
When I
Yeah.
pulled it up, I hit the wrong one. So you are correct. Thanks for catching that. So yeah, so that's the next one. So this is the attorney one, which is very different. So his personal cash is what, 38,362. Okay. Remember, he has no stocks and bonds. Okay. There is a 401k. And how much was the 401k? Do you remember?
169.87 or 169 and then 087.
Exactly. So $169,087. Okay. Um, and then he has no accounts receivable, but he does have a personal residence. Okay. And how much was the primary single? That's what primary SFR is, primary single family residence. Okay.
It's 550,000.
Yep, exactly. So 550,000. Now, one thing just to notate, when somebody puts down the value of their home, the question you want to always ask is, how did you come up with that? Okay, that's a kind of your detective question that you're going to ask quite a bit is, how did you come up with that? Like you know, and they might go, well, that's what I believe it is. Okay, well, that's good, but how did you come up with it? Like, was it an appraisal that you just gotten done? Was it a Zillow? You know, you want to try to find out like, what was the way that you came up with that? A lot of times what I'll do, I'll just quickly pop on Zillow and just log it in.
Double check.
Yeah, just to kind of say, is this, you know, somebody kind of always thinks their baby's the prettiest, right? So you should always double check and make sure. Okay, so commercial properties, he has none. There is no notes receivable. There, you know, I mean, quite frankly, has no automobiles, which is a little strange, but who knows? No cash value. Okay. And by the way, that would, if you see something that looks a little bit odd, you might just want to ask, because a lot of times what will happen on these is they don't fill them out correctly. And so if you see something, you just always ask the question like, hey, I noticed there wasn't anything on auto. Would you mind telling me why? And they might say, well, yeah, I just don't have any cars. It's like, good for you.
Yeah, when I was looking at this one, I was like, that is odd because they don't have any like assets of an automobile, and they also don't have any like auto loans payable. So it's like, okay, well, how are you getting around?
Yeah, exactly. That's exactly it. So that's a question you would ask. It kind of just seems like it doesn't fit, right? So we'd want to ask it. Now, quite frankly, you might actually say, all my auto vehicles are in the company name.
Okay.
So that is a possibility for sure in these situations. So you go down the line and then you get to cash value. Again, you're just kind of looking. Remember, we talked about cash value was there's term insurance, then there's cash value insurance. And one of them starts to accrue a cash balance for time. And then if they do have that, you definitely want to notate it for sure. Okay. Now he does have a business value here. How much is that?
4.2 million.
Okay. So what question would you want to ask in that particular situation? Because he just gave you a $4.2 million value.
Is that the value of your portion of ownership, or is that the value of the company in all?
Exactly.
Or the business in all?
Spot on. Yeah. Is that, yeah, exactly. Is that your portion? Is that total? The other question you can ask too is say, how did you come up with that value? Right? Like what did you, because somebody had to determine the value of their business. And when you value a business, you're taking the EBITDA and you're usually applying some sort of multiple. So, 2 times EBITDA or 3 times EBITDA or whatever that is. So it's a good question just to ask, like, how did you come up with that value? Right. So, and also again, is that your portion of it, which is great. Okay. Okay. So then we go over to liabilities and we say credit cards. How much does he have in credit cards?
12,830.
Exactly. Now, again, a question on this you would ask would be, do you pay that off every month? Right. Or is this a standing balance that you just kind of been paying down over time? Because a lot of times what will happen is they'll have a credit card balance and then they'll pay it off. And then they never really make payments. We do that here. We pay a lot of stuff on the credit card, but we never pay interest. We're just kind of, getting points, right? So that's a question you would definitely want to ask. Okay. Assuming that they're, it's a sizable balance or something. Auto debt, again, we have none. Primary mortgage for his personal residence, how much is that?
435,886.
Exactly. Okay, so we put that down. Now, what you're going to do is you're going to go down. There's a document that's kind of called the, personal financial statement schedule of real estate owned on page 5. and he has a monthly payment down there, or yes, on page 4.
Yes.
You know how much that is?
Let's see. Monthly loan payment. It's 3507, I think.
So you put that, you actually put that over here on the right-hand side.
Mhm.
So you'll put the 3507. And if you noticed what happened down here, as soon as you put that in. Okay, so as soon as you put in 3507, okay,
Oh, it's changing the owner debt service.
yes, correct. Okay, so you want to see like that's calculating it on an annualized basis. Okay, so we want to go back up. And one of the questions I would ask is I would say, well, we don't have it, but you would say, okay, well, you got 12,830 in credit card debt, but what's your monthly payment? Okay. Now I'm just going to take a crack at this and I'm going to say he's 18%. That's 2,300, call it a year. That's about $200 a month. Okay. So I'm just going to throw that down there just as an assumption. Okay. Might not be that, but you know, if you don't have it, you can kind of assume if someone's paying on a credit card, they're probably paying 12 to 18%, you know, so you could just kind of use that as a test case. Okay.
Okay.
So we keep going down the line and we say, does this individual have any other mortgages? And what do you think? Say?
They do not.
That's correct. They do not have any other mortgages. And what you would do is you'd also look down on the second page just to double check and see if they just forgot to pull it up. Okay. And so on and so forth. Okay. Now, what's interesting, okay, is if you look down, okay, this is where it's going to get interesting. Look down on Schedule 8, which is the contingent liabilities on page 2.
Page 2. Oh, Schedule 8. Okay. Yes.
So look what they have down here. It's got a
BMW, Chevy Silverado. Yeah.
right? So, but he never pulled this up to here, automobiles, right?
Mm-hmm.
So what we would want to do is we would want to find out what's going on there, okay? And we would want to say, why didn't you pull that up here and add that as a asset? Because what he did down here, notice he said the amount of the obligation was how much?
60,000 and 40,000.
So you kind of asked the question, do you know what a contingent liability is?
I have heard it, but I cannot remember what it is.
Okay, no problem. So a contingent liability, generally speaking, is only going to be a liability if something happens, okay? So it's contingent upon something else. So let's say that I'm going to build a new home, okay? And I'm going to borrow $800,000. And so I have this contingent liability right now, but I haven't drawn down on those monies yet to build the home. Okay. So the reason why it's contingent is because it's not really going to go into effect unless I build the home. Okay. So that would be considered a contingent liability. In terms of the car, this is tricky because I'm not quite sure why a car is a contingent liability. Does that make sense? Because you're trying to figure out like why what is that contingent upon? And why is that not just a liability that you bought a car and you owe a loan and you're paying it back? Does that make sense?
Yeah. And
So
that could possibly also just be like they don't know what that is when they're filling it out.
that's exactly it, which is probably more likely the case. You're just going like, okay, what does this mean? And so then you're going to go there and you're going to say, okay, looks like you do have two vehicles. Looks like they're
Yeah.
X amount of dollars, 100,000, okay, to Wells Fargo Auto and BMW Financial. So we need to kind of know, what do you think that's worth? Can we just get those amounts? You would also want to get the payments, okay? Does that make sense? So for the sake of this discussion, you're going to just put $100,000 here on the auto debt. And then what you don't have, what you're going to have to ask, is going to be payments. Okay. And why do you think we want to know the payments?
Because that's going to make a difference with their like personal expenses and monthly expenses, and eventually comes down or boils down to their debt service ratio.
100%. 100%. Now, interestingly enough, they have another quote unquote obligation to Alerus Bank. There's no collateral pledged, and they show $600,000. Okay. So my sense is that's just a line of credit, might be a personal line of credit or something. So that would be something else we're going to put on here under note payable. Okay. But we don't really know the payment. Okay. So it's something that we're going to find out. We're going to find out from them, say, hey, how much do you owe there? Okay. So that would be part of the journey. So it's kind of, you're seeing the messiness of this.
Yeah. And it's almost like you just want to be like, let's just sit down and fill this out together, because otherwise you're kind of doing the same thing again.
100%. Yeah. This is part of that journey of like shepherding somebody and going, okay, we need to fill this in. And a lot of times they just don't know, like they just don't understand. And so you're having to like educate them. Sometimes they just don't want to do it. Right. So it just depends on who you're dealing with.
Hoping for urgency.
Hoping for urgency, pushing the rope. Right. So basically now we have all of these assets and liabilities, and you can see right here, there's $1,148,716. You have 4,957,449. So their personal net worth is 3,808,733. Okay. So now we're going to go to their tax returns. We're going to start with 2018. Okay.
I think it's actually 2016 that's on the tax. I think it's 2016 through 2018, I think.
Correct. So we're going to start with 2018.
Oh, okay.
Does that make sense? So we'll go 2018, 2017, 2016.
Okay. So we start on the right side of it.
Yeah. So typically what I do is I'll start sort of, yeah. So I kind of go with the latest down to the lowest. Okay. So again, it's not the end of the world. You can do it either way, but just for the sake of discussion day, we'll just go through the 2018. Okay. So what you'll do, because there's lots of pages, is you're going to go all the way down to page 16. Okay. Of the PDF. So tell me if you're.
Yes, I'm there.
Okay, perfect. So the first thing we're going to do, we're going to go upstairs on line 21 here, where I'm going to change this to, so it'll be 2018, 2017, 2016. Okay. So we'll do that first. And we're just going to start going down the lines. So what was his W-2?
You mean like his salary?
Yeah, wages, salary, tips, W-2. So it'd be line 1.
Okay, it's the 217,943.
Exactly. Perfect. So 217,943. And what question would we want to possibly ask him about his salary? Would you say? He's married, mind you.
Is that like just him, I guess? Is that
Yeah,
his salary, or is that like a salary of the household?
exactly. So you see, yeah, exactly. If somebody's married, you kind of say, hey, is that both of your salaries? Is that just yours? You know, you just want to know which is which and how much is each. Okay. Then we go down, we ask the question, is there any tax exempt interest payments? Do you see any on there?
No, there's not.
Nope. And then what about qualified dividends? See any of those?
Mm-mm.
And then IRA pensions or annuities?
Nope.
Yep. And so no Social Security. And so we basically don't have anything on there. And so what we're going to do is we're we're going to go down, and you notice that on page Schedule 1, which is page 17, he has this little $80 tax refund, which we're not going to worry too much about.
Yeah.
It's not going to move the needle. But he has this really big number here that says how much?
The 614,509.
Exactly. So where do you think we go to get a little bit more color on that?
Schedule E.
Schedule E. Nice job. So what we're going to do, you go down to the Schedule E, and it shows that he has this 663,224 of non-passive income. Okay. Now you'll notice something. There's this Schedule 179 expense deduction. Do you see that on there? On line?
Yes, the 48,815.
Yes. Do you know what that is by chance? Section?
No, I also do not know what a non-passive income means.
Okay, we're going to learn that today.
Okay.
So Section 179 is an IRS code where it is it's an accelerated depreciation on like equipment. Okay. So what'll happen is if I bought a piece of equipment, or sometimes it's a car, could be, the IRS a lot of times will say, hey, you could accelerate the whole depreciation in one shot, or maybe it's over a short period of time. So the Section 179 will allow me to write that off as a deduction against my income. Okay. So you'll notice that like depreciation, remember we talked about depreciation, you kind of have this asset, and then you have this depreciation schedule that kind of happens every year, like writing off a certain amount. Okay. Well, a lot of times you can accelerate that. And that's what this Section 179 is allowing you to do, is to accelerate the depreciation. Okay. So you definitely would want to ask about that, like, go, hey, what's the story here? But it's something that's good, because when we add it back here, one of the things we want to do is we want to, sometimes the lender won't allow you, but we should add it back in.
Okay.
To the income. Now they've deducted it from that. Do you notice on line 31, they took the 663,224, and on line 31, they deducted it.
Yes.
Okay, so now you got a net 614,509. Now, from a tax perspective, that just makes it so this attorney has less taxable income.
But
Okay.
it's not representing cash flow.
It's not representing cash flow, exactly. And we're always trying to get to cash flow, okay? So what we're gonna do is under distributions, is we're going to add 663, 324, okay? Even though up here, it says that it's 614,509, okay? But because we're looking more for cash flow, we're going to give them credit for that amount, okay? Does that make sense?
Yes.
So, and then you kind of see, so that would be like a distribution for this individual, okay? Now, remember, one of the things we don't have here, which we would definitely want to ask for, is the Schedule K1, okay? Just to confirm some of these amounts, but this is good nonetheless for now, okay? And we're able to at least run some of the cash flow based upon what we have today. Now, there's no other rental income. That would also come from a Schedule E. Remember, sometimes they'll own properties that they'll put on the Schedule E, okay? So we definitely want to just see if there's any on there. So you can take a scroll through. But that's where we would start. So far, and you notice down here, we had less personal expenses, okay? So what we're doing here is we're saying if we're taking $12,000 per person, and we're saying we're just going to give you a personal hit on your lifestyle of about $24,000 a person, okay? And you go, okay, Dave, is that uniform? And the answer is no. It's all over the map, but it's a pretty good shot in the dark because every lender does it different, okay? Some do none, some do 12,000, some do 18. It's just, they all have their own formula. So you have to be a little bit fluid on that one, okay? So anyway, I'm going to pause real quick. How are you tracking with me so far? Does it make sense? Can I answer anything?
Yes, this is much more comprehensive for me. But so on this Schedule E, the passive income versus like
Yeah,
non-passive loss and all that, I don't know what.
yeah, great question. Yes, you did ask that, and I will answer it. Okay, so passive income, okay, what passive income means, Lana, is if I buy a property, okay, so I own a medical office building. So the way the IRS classifies it is there's a certain amount of hours per year that would classify you into a category that would be considered passive income, okay? And I don't know the exact number, so I'm not going to try to pretend, but
so like if you spend less than this amount of hours working towards this and then you are getting an income from it, then that's going to be passive income. And then if you're actually spending more hours than that, then that'll be non-passive income.
Exactly. Yeah.
Okay.
So that would be considered kind of active income, right? Like, so my business, I'm actively involved day in, day out working, okay? You know, for like the medical office building I have, I mean, I probably spend maybe 20 minutes a month, right? Like it's not a lot, but we get a lot of checks, right? And so that's passive because it's just like you're getting income. It's a passive activity. So they kind of came up with some, like hours or something. So that's what passive income or non-passive income is, again, from the Schedule K1, okay? And then sometimes you'll see a non-passive loss, which again, you'll see a loss that'll come for this K1. And you're going to say, well, they lost a bunch of money. Like I had a lender say the other day, gosh, you lost a bunch of money. And I said, well, maybe, right? But maybe not, because we'd have to go to the actual corporate tax return document. And we would want to say, did they actually lose money, or was that just depreciation he wrote off? Right? Those are the kinds of things you want to ask. Okay. So are there any other questions? Did I answer your question?
Yes, that answered my question. I think I'm good in tracking right now.
Okay, good. Awesome. I don't want to go too fast. He did have some passive income of $100. I'll be honest, when you start getting into like hundreds of dollars and 80, I just don't even.
Insignificant, yeah.
Kind of like in accounting, they'll just do rounding errors, right? Like just there comes a point, depending on the size of the firm, because like there's even some companies that will literally not worry about millions of dollars.
Yeah, they're like, oh, it's fine.
But they're just like, look, for the amount of time that goes into it, for the, if we're talking about $1 billion firm, like that's like pennies. So you don't worry about it. So anyways, so basically that's where we land there. Okay. What you'll do is you'll go back up, and then you're going to start to ask the question on this, what's called federal income tax, and also, state income tax. Okay, so that's the next thing we want to look at. So, and then remember that FICA is kind of like federal, not going to worry too much about FICA, but that's kind of the federal income tax for like when you get your paycheck. Okay. Mm-hmm. It's basically the Federal Insurance Contribution Act. So there's taxes that kind of come out, Social Security and things like that. Okay. So you're going to look at the tax up here. And remember, you're going to go to the first thing you want to look at is line 10 on page 16, which is the 1040 schedule.
Mm-hmm. The $799,005.
Right. So, because that's the place you start, because remember, we got to taxable income. Okay. And if you notice the 614,589 right on line 6, plus the 217,943 got you to your gross income. And then they have these deductions. Okay. And deductions are things that will reduce your taxable income. Okay. Mm-hmm. We're not going to worry about it, but I'm just kind of educating you, like, that there's these schedule of items that will help reduce the overall taxes. So for example, if you go down to page 20, there's all these things that can help you reduce your taxable income. Okay. For example, interest on your mortgage. Okay. So when you pay interest on your mortgage, they allow you, at least for now, they allow you to reduce that off your taxes. Okay. And then, gifts to charity, charitable contributions. And so they kind of add all these things up. And then you see at the bottom, line 17, 33,527. See that?
Yeah, the total itemized deductions.
Uh-huh.
Or it says on the left, it said like it's lined up with. Oh, I thought you said huh, and now I understand you said like yes.
So lines 17 total deductions, and then you take that. scroll back up to the 1040, and then you go, oh, okay, line 8. That's that number. 33,527. Make sense?
Yes.
And then you get to the 799,055, and then they make this sort of assumption that 235,011 is your tax. And then what they do is they will realize that there was some tax from your federal income tax, W-2s, okay? And then you ultimately say, okay, well, add any amount from Schedule 5, 238. So they come up with these total payments, which is this 266,912, okay? These are your total payments. So that would be the tax that he is going to have to pay.
Yeah.
Okay. And so what we would do is we would take that number in line 23 and we would put it in there. Okay. And I believe
In line 23, the 6579.
yeah, sorry, which sorry, line 23 on this spreadsheet.
Oh, okay.
Sorry, I'm kind of popping back and forth. 66,912. Okay, goes in there. Okay, and then you can kind of see this total tax number that's starting to accumulate. Now this automatically calculates FICA, because FICA sort of takes your tax and it's almost like 9%. So it's just more of a guesstimate. It's pretty close. So it automatically calculates it. Okay. Which is usually about 9% of the tax, the federal tax. Now for state, we'll see if he has it in here. I don't believe we do, but you can go down and see if they've given you their state tax returns. A lot of times they'll have them attached. Okay. So for the individual tax return, in this particular case, they do. Okay. And if you go down to page 31, you will see that there's this 36,000 total payments and refunds. 36.
Yeah, on line 59.
Correct. Okay. And so that's the amount that you're going to add in line 24 in the spreadsheet, B24.
Okay.
Does that make sense?
Yes. So if they don't give the state tax return, then do we like just estimate it or ask them for that specifically?
Yeah, lenders don't seem to be overly bothered by it. So I would say typically you're just going to ask them to give you the full tax return.
Okay.
And if they don't, try to get it. But in a lot of cases, here's what I would say. This is probably general rule of thumb. If it seems like they're like it's tight, right? Then you probably want to get it, because that could kill the deal if all of a sudden they find out the tax. If there's tons of cushion in the debt service coverage ratio, then you probably don't need to worry about it.
Okay.
Because it's not huge usually. Okay. As you can kind of tell, it's almost like 10 or 12% of the total tax.
Yeah.
So it's so you see this, that's a big number, right? 327,678.
Yeah. We add that one back in, right? Or,
Yeah, well, what we would do, okay, is we're actually going to deduct it, okay, is we're going to take this. This obviously didn't have the calculation. And you can see that we deducted it because truly his cash flow is not 881, 267, if you add these two up, but it's really 529, 588 because he's literally going to cut a check for 327,678. And so his true cash available is 529, 588. Does that make sense?
um, I thought that, oh, is this, he's like making the payment on line 59 of the personal tax return. He's making, or on the page that we were on, page 31, he's making that payment of 36,744. That's not a return.
That's correct. Yeah.
Okay, then yes, yeah. That makes sense.
Yeah. You're like, what are you talking about?
Yeah, I was like, what is happening?
Literally cutting a check to the state for taxes. Make sense?
Yes.
And so because again, he's making a lot of money.
Yeah.
Okay. So, he's got his salary, he's got his distributions. So, so that's why you're going to reduce the taxes from his income. And that's why you get to this net cash available is the 529, 588.
What is the, oh, I see it now. I'm looking at the formula you have on yours and the formula I have on mine, and I get it now. I see what's wrong with mine. Got it.
Does that make sense? Yeah,
Yes.
this one didn't, it just didn't pull all the way up here. So
Yes.
okay. Now, so is that making sense? Because I think that'll be really important for you to.
Yes, I understand now. I was confused on that. I thought that he was getting like a return of that much. And then I see now the total tax is coming away from the total income that he has basically. And then that's giving us the total owner cash available.
Yes, 100%. Okay. So, and then what you're going to do is you're going to do that same thing in
For 2017 and 2016.
Okay. And what you'll notice is that his net cash, technical net cash available is 485,104 because he's making these payments, right, to his debts. And so if you really wanted to take it a step further, which when I get you the updated spreadsheet, I'll probably just do it normally, is you could just divide that number by the 529 divided by the 444, 484.
Okay.
That's a tongue twister. 484. And that'll tell you the debt service coverage ratio for his personal. Does that make sense?
Yes.
And so it's 11.9 times.
Yeah, really high.
Very high. Now, remember something, there's still some blankety blanks, right? Like we don't know.
What he's paying on the notes or the auto loans.
Exactly. Now, quite frankly, it's probably not, I mean, it's going to take him down to maybe 10.
Yeah.
So it's not like, we're not worried, but, we will need to find out nonetheless. Okay.
Where does, or what's the formula on the owner debt service? I think something is wrong with mine. I'm like 2,000 off.
Okay, so you're 2,000 off the.
Yeah, I think I'm $2,400 off on my owner debt service.
Okay, so that takes the 3,707 times 12, and then I had that.
There, I'm going like backwards and forward, but my mortgage. Oh no, that's not it. Oh wait. Oh. Yes, it is. It's that $200. I see it. It's not adding in.
Remember, we kind of estimated that $200.
Yeah, I have it written down, but the formula isn't set to add it.
Got it. Okay. Yeah. So
here we go.
Yeah, I just kind of added that in there just because we're making some assumptions, right? So those would be some things you'd fill in. My guess is you're probably gonna have another couple $1,000 to his total monthly. Once you kind of go through auto loans, and maybe it's 3. It just depends. I mean, there could be more, but you would definitely want to know like what those payments are ultimately. Okay. So that's all of the headiness for today.
Yeah.
We'll pick up on more next time.